StockMinter.com studios here in the Black Hills of South Dakota. I'm your StockMinter Brian Johnson. And let's catch you guys up. It's been a week now, and it's been a week of devastation as the bears have continued to take over the markets. Now, I have been talking to you guys in the past few videos about how you cannot let your bias get away from you. If you want to dabble in long sides, that's great, but until the bulls have revealed their hands, you must stay patient. And you can see why. If you decided, yeah, well, I don't care, I'm going to go long with everything I own about a week ago, you are getting killed. You're in a very bad place right now, and we don't know when it's going to end. This could end tomorrow, and we could run up very hard. This could end 2 weeks from 3 weeks from now. Who knows when it could end, and it could continue to plow its way downwards with a bunch of this run down sideways, low base, run down low base, run down low base, in the much the same way as if you go back and look at the markets, you'll see run up high base type motions done by the bulls in some circumstances where you just can't. Matter of fact, a really good example of that is to go back 1 year, and you'll see that we just plowed our way upwards for like 4 months, at least 3 months, almost 4 months straight. Right around this time, it started, I think, in December, late November into December, and went through like March. It was crazy, as hard as the bulls moved it. Well, now it's the bears' turn, and they're really dragging things down. So keep your bias to yourself. Check it at the door. If you want to go long, that's fine, but dabble, go small. I am, all disclosure aside, I am also long right now the NASDAQ and waiting to see when and if it will resolve. But I have left room for, adding to it if I want to cost average a little bit. I don't like to do a lot of cost averaging, so I'm a little bit, perturbed at the fact that we haven't seen a jump yet. But man, honestly, guys, I really think we're close now. I will tell you to stay with the bears. When the bulls come in, they will let you know. They'll make it more than obvious, and we'll have some really good, decent, hard pushes to the upside. But until that happens, stay cautious. If you want to go long, like I said, great. But when it goes up, don't be afraid to get a little greedy and take some profits until we see that really hard, forced push to the upside. Then you can feel pretty confident in the fact that you're in a good trade. And what I mean by that is, when the Dow covers about 100 points, or let's say 50 to 100 points, when the Dow covers 100 points in literally a few minutes, that's when you know you may now finally be into the bounds. Usually when we get going on something like this, the SPX will run about 10 points really hard. That's about 100 points in the Dow, and it usually happens within a few minutes. You get a really strong hard push up, and what it'll do is it'll bury people. If they're short, they don't get a chance to get out. If they're long, or if they want to be long, they don't have a chance to get in. So you need to have orders set. You need to be ready for this when it happens, because sometimes you don't get enough time to really jump into it. Otherwise, you miss out on half the move, and then you're questioning, well, do I get it now? Well, do I get it now? Well, do I get it now? And then you're stuck. So here we are. This is what we're looking at. You can see the devastation to the downside. Tomorrow, maybe we get, and we usually do anyway, it's Friday, but if we're going to get a move, we usually get some sort of quick move shortly after the open. And then after that, it usually dies down, and we don't see a whole lot the rest of the day. So be cautious of that coming into tomorrow's trading. And be prepared for that. And then after a couple hours of trading on a Friday, it usually goes pretty dead for most of the day with a little bit of movement here and a little bit of movement there, and it's better just to kind of walk away from it and call it a day. So look for a move maybe early in the morning, and we'll see what we will get. Not much in the way of economic data coming out tomorrow, so not a whole lot of news necessarily to push the markets unless something external comes about, whatever that might be. But keep in mind, look, we're flowing and still in a downtrend. Everything's moving downwards. It's all down, maybe a little pullback, down, low base, down, pullback, little bit of pullback, down, low base, down, low base, down, low base. The bears have done an exquisite job of pushing this thing to the downside. So now it's just a matter of sitting around and waiting. Here, now, with the whole bull side being said, let me say this. Don't be afraid to go short as well. Remember, the bears are winning here. They're winning. But be greedy, really. If you get a good opportunity to get in and get short, either move your stops along down with the move and or go ahead and find predetermined places to take profits. Don't be afraid to take some money when you can get it, because these markets have not been kind necessarily when it comes to giving up good profits. Yesterday was a good profit day as we ran straight down for a while. Today was not. We were down 30 points in the Dow, which is a sneeze. It's not much to talk about. Look, though, as we've plowed through support, plowed through support, plowed through support, plowed down into support, we just keep hitting these levels. There's these, well, if you want to say, just well, I can't think of the word right now that I'm looking. Shelves. There we go. There are these shelves of support on your way down, and we've been able to land on them and sit on them and land on them. And don't be surprised if maybe we do the same thing with this. Sit on it for a while. We might go straight sideways tomorrow. But down below the 12.5 area is maybe a place to dig into the short side. Once again, be greedy. And then to the upside, you really want something back up into here before you really get more into a trade where you can get in and stay in and stick with it for a while. So you want to be cautious once again to the long side. Get in, that's fine. Dip your toe, but you want to make sure that you're taking profits when you can get it, as we've just continued to fall down here. There have been all kinds of stories about why this is happening. Obama's re-election and the fact that he wants to tax the rich. QE type information about them buying the new round of QE, quantitative easing, that they're about to get ready to start here. They're just shaking out the weak hands, basically. I saw one about this week is options expiration week, and I read where the put call ratio is especially heavy for the puts. If we finish really low, apparently the put buyers or whatever make a lot of money this week, so there will be a huge bounce. That would be and would inflict the most pain in the market. None of this is working out. None of this is panned out. It's just all conspiracy and conjecture, to be quite honest. The fact is, we are just flat out moving down, and you've got to stay with that. So be careful of the news. I mean, take it, read it, absorb it, but don't put a lot of emphasis on it. Down is down. It's really just that simple. You can put whatever spin you want on it. You can put whatever news you want to it. But the truth is, down is down. So stay with the down until it's no longer down. I know, sage advice, huh? I know. But it's the truth. Okay? Right now, we're moving down. Don't get too far ahead of this. Okay. So moving on, below here and above here are areas that you can look at to dabble in low and high. Ultimately, back up above here is where you want to be when it gets into the bounce. The Nasdaq's been bleeding to death. Apple's been getting absolutely smoked down here. 700 to what, 525 in a couple of months? Yeah, getting killed. Eventually, I do believe the buyers will step back in and say, hey, this is a pretty good deal in Apple. We should probably cash in on this. And so you'll start to see some buying. But listen to me. Until we see broad-based buying in the markets, we can't expect a bounce. We can't look for a bounce. We can't expect anything major out of these pops to the upside. It's literally been a week, 2, 3 weeks since we've had a really, really good entry on the NASDAQ. So here we are, once again, at the lower end of this level, 2,700. Now we're going to be able to talk about something. Now we could be in for a bigger bounce once we get up there, but keep in mind that's 125 points away. That is a long ways away. So looking for this bounce somewhere down in this area. If you want to dip your toe in, fine. I don't mind playing the NASDAQ long. As a matter of fact, once it gets going, it really should eat some acreage up. It has been destroyed the last few weeks. So when it gets going, it really has a lot of ground to cover and could run very, very nicely, giving you a brilliant swing trade where you could get in, let it run. It might not happen tomorrow. It might have to wait till next week. Coming into the Christmas season, sometimes we get that Santa Claus rally. I'm not convinced we'll get a major Santa Claus rally this year, but we usually get one, so I'm certainly looking for it, period. Either tomorrow or starting early next week, some sort of a bounce at that point. All right, so here we are into these lower levels. Let's take a look at the NASDAQ daily, and you can see what we're looking at, sitting right on another shelf of very good support, right down here at the 25.25 area. Getting back into this area here, 26, I don't know, 25.75 to 26 is a good place to start dabbling in a long play there if you want to get in. Maybe one, like I said, that you can maybe hold for a while. Back below this area is a place to continue to go ahead and play the short side. The NASDAQ does not want to give in. It's doing a brilliant job of hanging on down here. Maybe we move down. Maybe we hold on to this shelf for another day. I don't know, but we are at a pretty good, strong level of support. As you can see, we've broken down below the 50-week moving average, not once, but 2 weeks in a row now. I like to give the bulls a chance to make it back up, but there's been no attempt at all. For you Elliottians, this is a wave 3 of something. This is a wave 3 of something. This is putting this high in major jeopardy. This could be the high for not only, I really think it'll end up being the high for the year, but this could be the high for a couple of years. I know, sounds a little bit bearish, sounds a little bit ominous, but I'm just being honest with you. This could have put in the top for what could be a long-term top for a few years, not just a few months. The bounce, when we get it, will tell us. I think it'll be extremely telling. That will be the mark to be watching. But until that happens, stay with the bears, okay? We've got a long ways to go down here. And the bigger, more large shelf is down around the 2450 area for your support. Here's the same thing on the SPX, just grinding our way downwards. Not much to show today, just 2 points down by the end of the day as we wandered sideways. But guess what? Sideways is bearish. It is not bullish. There is no buying going on down here. There's no attempt at any major buying going on down here. It is very, 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 did I say very? Let me say very weak. So as we fall down, we come into and below the 200. Hold once, twice, 3 times, 4 times before we fall down again. And here we are back to another shelf of lower support at the 1350-ish area. Back below that, it's 1340, then 1330. Somewhere down in here, we're going to hit some major support as well. But just continue, guys. 1340, 1330, 1320, 1310. Just every 10 points after this is really what you're going to be watching on the SPX going forward. On any kind of a bounce, if we can get back up and into this area, that's a good place here to start looking at your long. So 65, 70-ish, something like that. But what we're really focusing on in a push to the upside is the 200-day moving average. Can it and will it get to, break, and hold above the 200-day moving average? Then maybe we can get a bounce and maybe we can get back into this 1400 to 1420 mark. Way too early to talk about that because we haven't even hardly seen a white candle. We certainly haven't seen a large white candle in a very, very long time. So very strong selling here. And the VIX, this is probably one of the most peculiar things for me. Usually when the markets are dropping, the VIX is spiking. It's not going anywhere. Nowhere. Today the markets were down a little bit, the VIX was up. Okay, it's confirming everything's great, but look at the bigger picture. We have been getting absolutely slapped in the markets to the downside. Where's the VIX gone? If you said nowhere, you get a gold star. Nowhere. There's no fear in the markets here. Usually this is a big mark of fear. You know, the markets drop, the VIX rises up. Before long, the VIX is at 26, 27, and the markets are down as far as they are. No, we haven't seen anything of the like. Nobody's scared at all about what they're seeing in the markets. It's like, yeah, nothing but a thing. So there is no fear in the markets. The VIX has confirmed some days and not confirmed others. It hasn't mattered. The fact is, it is still in a complacent area. Back above 20 starts to mark more fear in the markets, and there is zero, as you can see, and has been for the last couple weeks. So the markets, there's really no concern, whatever. They're rolling this market down, but the fear is not rolling into the market here in the least bit. This is also evident on the weekly, and you can see it moving sideways here, and still well contained within the 15 to 20 range, which is what you know I watch for this complacency mark. Just no fear. So that's a little bit odd to me. I'm really kind of surprised we're not up in this area here, maybe even higher based on what we've seen, because you can go back in time and see where we were at. Keep in mind, let me just show you this here as a for instance. Let's use the NASDAQ. No, better yet, use the NASDAQ weekly. Check this out. This is why you have to know how to short, guys. It's so important. you want to play this game, you want to make money at this game, you have to know how to short. So if you don't, I highly recommend you figure it out. Once again, shameless plug, take my mentoring course. Man, I can show you everything you're going to need to know in that mentoring course. It'll pay for itself. Think about how much money you've probably lost in the markets at this point. You've probably lost at least as much, if not twice or more, what it would cost to take my mentoring course. How valuable would that be to you? Okay, look at this. Since we hit this high up here in the middle of September, 1, 2, 3, 4, 5, 6, 7, working on 8 weeks down. Okay, that's only 2 months. But in that 2 months, we've basically wiped out what we've done almost the previous 4 months. Do you see how quickly things change? This is June. This is the end of May into June, and we've almost wiped out everything that was done since June. So you learn how to short, and you can make money way quicker than you can to the upside in most cases. Not all cases, but in most cases. So keep that in mind. It just doesn't take long. Okay, where was I? Let's go on to the FAS, give you this really quick and wrap it up. Here was the triangle I was telling you about. I said breaks back below these levels are your places to get short, and that has paid off in spades if you've been watching the video. I've also given spots along the way. Back below 100 was one of my more favorite spots to get short. That has paid off in spades, and guess what we are now? Trapped in a little low base formation. Now, it could resolve up, could resolve down. We don't know yet. If it resolves up, it's a broken formation, but it doesn't matter. The point is it's playable. Back above 98, back below 94. Those are going to be your plays on the FAS. Here is the slope, and we are moving precipitously to the downside. Here is the daily, and it looks the same way as we sit and hold below the 200-day moving average. Keep in mind that the SPX has already done this little scenario, and it didn't finish well for it. Maybe it works out better for the FAS, but right now it's below it and it's closed below it for a couple of days. That doesn't bode very well necessarily for the FAS. So it needs to giddy up and giddy up here pretty soon, or it's due to suffer the same problem as the SPX did, where it got below it and stayed there for about 4 days and then plowed down quite drastically. 94 and 98. If you like to play the other one, which is the FAZ, this one you'll be looking to play maybe up or down depending on what your preference is. Here was the break of the triangle. Back above 1750-ish was my call a long time ago. This one played out and worked out beautifully. Back above 1850 was another beautiful trade. Now we're trapped between 1975 and 19. These will be your plays. Back above 1975 and back below 19 will be your plays, both to the long side and the short side. And actually, this is still looking pretty good for the bulls to the upside. So be cautious with this one, especially if you're looking at playing it short. But pullbacks, wait for the break before you get in. Don't guess and think, oh, we're definitely going down, or whatever the case might be. Just wait for the breaks. You'll be well served to wait for it. Here was that large channel that we followed for months and months and months and months and months, and it finally paid off in spades. The break was down here in the 1650 area, and now we're up about $3 since then. But we've had really good entries since then at the 18 and the 1850 area. They've all worked out beautifully well. So there you have it. There's my video catching you up. Once again, sign up for my newsletter. It's $28 a month. It's $1 a day. There's so much more than in those videos than what I do in this, because I work on them every single day, except for Saturdays. But I work on them every single day, so there's more to talk about. There's more opportunity for me to talk about stuff. I get into Elliott Wave. We cover all kinds of different things that I don't cover in these videos. So if you like the information content in this, you're going to love the subscribers videos. Try it out. I don't make you pay for 3 months up front or anything like that. You can pay for a month. If it doesn't work out, isn't something you like, you can quit at the end of the month. The mentoring course, send me an email, write me about it, ask me questions about it. That is really the best way to get yourself trained in the markets. Okay, so the newsletter is a beautiful supplement, and if you want to start there, fantastic. If you want to do it full time, if it's something you want to do on a more regular basis, if you really want to make consistent profits at it, the mentoring is where it's at. Send me an email, send you information on it, we'll find out if it's a match for you, and otherwise, we'll see you in the next video. Talk to you later. Bye.